Joining me now to take a look at all the numbers for Palantir and more. We've got Jay Woods, Chief Global Strategist, Freedom Capital Markets. Jay, it is always good to see you, always good to be with you. You're a friend from the floor to beyond. All right, let's talk about Palantir. It just released numbers. It had massive growth last year. It seems like there's nothing stopping this train, but what do you take away from their latest numbers, guidance, et cetera?
It's a juggernaut. This is a stock that you want to own and just put away. It reminds me of the growth of Tesla back in the day. It's got a cult status. Some people will argue the valuations are a little out of control, but what they did this quarter, they knocked it out of the park. They beat EPS by 14 cents. The revenue continues to grow, and their U.S. sales are looking to grow by 50%. Then you look at their ties to the administration. They're already involved in all 4 branches of the military, 5, I guess, if we count Space Force, Israel. So there is nothing that they've done that has gone wrong, and the momentum is there. And this is a stock that you just want to put away. And if you're not in it, it's probably not too late because the tailwind here for the next several years is just tremendous. And they said it. What was the line? I'm going to untamed organic growth. That's something you hear someone else say. You don't hear the company, it's untamed organic growth.
He does. The CEO does seem like a more measured person. And I say he kind of has a professorial look to him. And I wonder if this is the new AI, not new AI growth story, because it's obviously been growing, but is this the replacement of Nvidia, considering how much of a drawdown that we've seen with Nvidia, especially given the context of the DeepSeek fallout?
Yeah, no, it's not a replacement. It's its own AI story in its own right. So to me, you can own both, and if you do, you'll be fine. What's going on in Nvidia is hopefully just a bump in the road. We still don't know what DeepSeek's competition means for the chip maker, but Palantir right now, they're just, in a lane by themselves, crushing it. So this is a stock you just own. If you have it, just put it away and just be happy you have it. And if you don't, I don't think it's too late to jump in. I still think their growth is just, as they said, almost explosive. So I'd ride the wave.
That makes sense when you say maybe it's not too late, especially when you think about the growth on the commercial side. But let's get into some other earnings that we're watching. Spotify, it's set to open higher today off the back of their latest earnings. What'd you like in their numbers?
The sub-growth. I mean, people were worried that, the subscription model, people were going to pull back. They raised prices. I mean, I'm a Spotify junkie. I can't live without it. Their DJ is unbelievable. But they've gone into audiobooks. Their investments into the podcasting. Everyone said they paid Joe Rogan too much. They paid Bill Simmons too much. No, these shows, the ad revenue they're bringing in from them, the users love the product. First full year of profitability. So they're hitting on all cylinders. I don't know if the growth can continue at the rate it has, but this has been another phenomenal quarter, and investors are being rewarded for it.
Yeah, clearly. And let's talk a little bit about the market impact of tariffs. We've got the latest round, China hitting back on U.S. tariffs, retaliatory move saying 15% on coal, on liquefied natural gas, 10% coming for crude oil, farm equipment, some cars. That's set to come later this month.
All my talking points.
No, it's
yes,
okay.
I do
You
that.
can talk. But I want to hear your view on the impact of the market, especially when you think the way the market looks today. It looks like it's not going to be a big hit because of this.
As of now, yes.
As of now, but could that change?
This is what's crazy. Being down here on the floor, you may see us put our head up and look over here and look for news on the tape. Yesterday was a perfect example of that. With Canada and Mexico, which seemed like an afterthought. Now we have 30 more days. We'll get back to them. We got some time. But tariffs are being used as a negotiating tactic right now. No more, no less. Does he want to tariff China? Yes, I think that is a focal point. But Xi is just coming back. They have not talked. The Canadian and Mexico leaders talked with President Trump yesterday, and they were able to push back. Trump got some concessions. So while some of us may not like the fact that he's using the market and using tariffs as
a bargaining
a
tool.
bargaining chip. Right now, he's getting some results, but from a market's perspective, we're watching the tape constantly and seeing wild swings. The volatility, if you look where we were Friday at 1 o'clock, we were just about talking S&P 500 new highs. We had a 3.3 retracement from 115 on Friday to yesterday's open. Yesterday's open, the DeepSeek open the following Monday before that. That level's key to watch. It's 59.62 for those watching at home. And then if we take a further dip, that 100-day moving average has been a line in the sand. That's around 58.80. So right now we're still in a buy the dip mentality. The tariffs have been used so far for productive reasons. We'll see if that continues. One misstep in this market will let the president know that, you know, we're not on board with this one. So right now things are okay, but to break out to new highs, we got to focus on earnings, and we got a ton of them. And Palantir was a good one today.
Yeah, we do. We have a lot of earnings to chew on this week. I mean, we've got more than 100 companies reporting this week. What's the biggest one for you this week?
For me, it's Google, and I know you're going to talk about it next, so I'll let someone else talk about it. But that's one of my favorite stocks. Google, Alphabet, as it's known. That stock has been primed, and it looks fantastic fundamentally and technically. Let's talk about cloud business. Cloud is what hurt Microsoft. Let's see what Google has to say about the cloud.
And then I want to ask you, because I know you have a unique take, a unique indicator that you pay attention to, the Super Bowl indicator. And I know your team is in the Super Bowl this year. You can let the people know.
Yeah, go Birds. Yes, they are. They're back. They're back for revenge this time.
What's the indicator? What's the correlation to the market?
Yeah, well, the Super Bowl indicator is a fun indicator. Don't ever throw your hat on this one. And it had good correlation up until 2000. Thank you, Tom Brady and the Kansas City Chiefs, for ruining it. But when the NFC won, the market tended to do better. Now it's a coin flip. It really has no relevance. But I went back and I looked. When the Chiefs are in the Super Bowl, now 6 times, the market's up on average 18.5%. When they win, it's 15.5%. So the market's probably going to skew towards the Chiefs, because when my Eagles are in it, they've been in it 4 times, only gain of 4% on average, and when they win that one time, grease the polls, but we were down 6%, 6.2% in 2018. So
do you want your team to win or not?
I can take a personal portfolio hit for my Eagles to win another Super Bowl and get revenge on that 38-35 controversial loss a couple years back. Not that I'm bitter or anything. And I know Kevin Green's watching this back in the studio, and he's a big Chief fan. So we may have to make a wager on the side.
We'll let you guys handle that on the sidelines. All right. That's Jay Woods, Chief Global Strategist at Freedom Capital Markets, with insight on the markets and the Super Bowl indicator.